All right, good morning, everybody. Thank you for tuning in or calling in for this week's Spiders preview. Things acted out pretty much as we kind of expected last week, in the sense that the levels we were looking at and the trends we were talking about came into play. So this should be an interesting week, and I think there's a chance we could see some negative action because there's a lot of important support levels being tested, which we're going to get to. Like, for instance, in the financials, discretionary, energy, materials. If these things all break through support, which they've been testing and consolidating over, then we could see a bigger move down in the broader markets. I mainly trade the SPYs, as do most of the people that call in, from my understanding. But it's important to know what makes up the SPYs because something might be setting up for a big move. Like, for instance, a move in the technology space or the financial space, for instance. And that's going to move the spiders if you trade the spiders. So don't listen to what the people on television are saying because most of the time they're wrong. It's a significant amount of the time they're wrong. The market does not move due to trade wars and the Turkish lira. It moves due to deals with levels and trends. Now, in my 2 decades as an institutional trader, I would tell you you need to know where these levels are because say you have an order to sell 1 million shares of Apple and 1 million shares of Microsoft. Well, you need to watch the tech sector because if the tech sector breaks support, well, then these things are going to head down. So if you're a seller, you're going to get more aggressive and try to get it done. If you're a buyer, you're going to wait and say, well, this stuff is coming in, so I could step back and try to get a better price. So it's important to understand that there are certain price levels in the markets that are more significant than others with regards to the amount of the supply and demand that exists. And you don't need to be a chart guru to look at a chart and see that that's true. And second point is prices are always doing one of 3 things, either going up, going down, or staying the same. And again, if you look at a chart, you don't need to be a chart guru to see that it's true. It's pretty fascinating if you want to get really into it. Now, I don't follow any of these esoteric things like Gann theory or harmonics. It's just, to me, that stuff's like Bigfoot and UFOs. Actually, today I was watching a show about the Nazca lines on the History Channel, which are these lines that the Nazca people or the people that live there in Peru put in. All right, so this is just an overview. All right, so here's a look at the SPYs. And as we can see, they acted pretty much exactly as we thought they would. Found support here at 270. And the low trade was actually 270.36. So it's pretty amazing how these levels are so well defined these days. And that's all due to ETFs. So anyway, there was support here because there was support back here and support back here in June and July. All right. And when we got oversold and rallied, we hit resistance around the 280 level. Okay. And the 280 level is important because it was support pretty much all through, let's see, what month is this? So July and August was resistance here, and it was resistance earlier in the year too. So going forward this week, I'm going to be watching the 280 level for resistance. I'm going to be watching the 270 level for support. Now, like I said, I think things are going to head lower, but it's important not to be married to an idea. If tomorrow morning things rally and you can't hold on to an idea because the market's always going to be smarter than you. But I will show you why I think things are shaping up to maybe have a potential big move down. All right, so here's a longer term chart of the SPYs, and again, you can see why 270 is important because it was important here, and you can see why 280 is important, resistance, because it was resistance back here, and it was resistance here, and it was support here, and it was pretty much the lows right here in mid-September. So this is a chart that shows you that certain levels are in fact important than others. For instance, we talk about the 286 level, which was an all-time high here. But when the market rallied, it ran into resistance here, support there. And when this level broke, that's when we got this big sell-off, right? And on the way down, where was the first stop? And where did the market close? Well, it closed at 280. So that's why you need to know where these levels are. Don't listen to what the idiots on television are saying. It's like, oh, well, the market's down. Like, look at this, right? See, we know that the market sold off big here because this level is so important. And it's important because it was an all-time high, and it was resistance, and it was support. So this is just technical action. When this level breaks, the media is going to try to, figure out like whatever is going on that day. Like, oh, well, the Turkish lira is down, the Turkish lira is up, the Australian this or China that. But if you can ignore them and just to pay attention to these levels, you're going to do much better. I don't even listen to the news anymore. It's really bad. Well, right now in the background, I have the game on, the Cowboys-Redskins game. I watched the Patriots game today. I mean, I'm a Patriots fan. I know, please don't hate me for that, but I did grow up in New England, so I have a right to like the Patriots. They beat the Bears, but it was kind of a fluke, in my opinion. The Patriots defense sucks. I mean, my high school team was scoring them. All right, so here's the tech sector. And we talked last week about how they found support at around 68.60, which is where the lows were back here in June and in July. So it was oversold and bounced back up. I mean, this isn't as clearly defined as a chart because these things are way more volatile. But I mean, this is a clearly defined support level. The 71 level isn't as well defined. But you can see 71 was where the lows were here in August. So we smashed right through that, but it has been the top of the range. So going forward here, I'm watching the 71 level and the 68 level, or 68.60 level, sorry. Now this is one of the levels I mentioned that is testing support. You can see here. I mean, that's where Friday's close was in the financials, right? You can see they found support around 26.40 because back here it was the bottom. So here it's been support. No surprise. We mentioned it for the last couple of weeks. But anyway, this support level is being tested. So if this breaks and the other levels break, like I mentioned, we could see a big sell-off. I mean, not a market crash, but a significant sell-off. And you can see the 27 level has been the top of the range or resistance. And that is an important level because it was pretty much the bottom of the range back here, and then from April through June, maybe early July. So again, here's another example of how levels are important, or certain levels are more important than others. Now, look at this long-term picture of the XLFs. You can see how important the 30-50 level is, right? It was pretty much the exact top here before the market crashed back in 07 or 08 or whenever it was. And it was the high last January. So if they, when it's going to happen, hopefully, for civilization doesn't collapse, but eventually the XLFs will get back up to 30-50, and I am going to be looking for significant resistance there. All right, so here's healthcare. You can see it broke down through this level. We watched this 92 level. I still think it's important, even though it was a little volatile around here. It just became oversold, or they became oversold. But we can see how 92 is important because it was the top there, and at the time that was an all-time high. And you can see that it was support here. And I know on this long-term chart that doesn't look that long, but that's about a month. So we got way oversold, bounced back above it. I think that's kind of an anomaly. So now I'm still going to be looking at this 92 level for resistance, longer term 85.50 for support. Okay, and here's another thing I mentioned. This is the consumer discretionary sector, and you can see we had talked about this 107 level being important because it was resistance here and it was a level that this rally took off from. So anyway, like a week or two ago, it got there, it was oversold, okay, rallied, found resistance around 110, and we expect resistance there because it was the bottom here and it was resistance there. But here's the thing, okay, and this is important, so pay attention. The first time it got there, it was oversold, right? You can see it's below the Bollinger Band. So it didn't really bounce back too hard, and now it's been consolidating. So now that it's not oversold, there's a much greater chance that it's going to break this level and go lower. Generally, when things get to levels and they're overbought or oversold, they tend to either revert or consolidate. It's pretty rare for something to be overbought or oversold to break a level and hold it. But this kind of action could lead to the market heading lower, all right? Or this sector heading lower. So, because it's been at the level for like a week or two and been consolidating. So the sellers are pretty much taking out the buyers. So there's going to be no buyers left. So the sellers will have to push it lower. So, right. And we're going to see this in other sectors as well. Okay, you can even kind of see it here, although I didn't mention this at the beginning, but this is industrials are still in this downtrend. And you can see they're testing the lower end of the range they've been over the last week or two. And again, here's another example of important levels, right? 80 was the top here. So guess what? We got right back up here, and guess what? It was resistance. Look at the 71 level. Clear support. Clear support. Even here, right? I mean, the low trade of this day was probably right at 71.50. 71. So if it continues lower, guess where I'm going to be looking for support? Ding, 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 around 71. This was kind of an intermediate interesting level too. See, support or resistance here, support here. And it smashed right through it there. But you get what I'm saying. I mean, clearly every chart we look at illustrates that there are certain levels that are more important than others. All right, now let's look at this consumer staples. Now I thought this was very interesting because check this out, right? This thing's been rallying. But this could be a bearish signal for the overall markets because staples is considered a defensive sector, right? People are always going to need to buy staples, regardless of how bad the economy is. You're always going to need to buy, I don't know, toothpaste. Well, that might not be good, but water or whatever staples are. I mean, I'm not a fundamental analyst, but staples are the stuff you need. Discretionaries are the things you want. So when money flows into the staple sector, it shows that there is money flowing into a defensive play because they're bearish on the market. So you can see how this 53.50 level was important because it was support back here in February and March, and in April it was the high, it was resistance here, was support here in September. So anyway, this is very interesting action, and I missed this. Well, I didn't miss it. I saw it, but I didn't understand the magnitude of it. So we're right back above this important 53 level, or 53.50. I'm going to watch this for support. But this is a pretty interesting thing to play. If you're bearish and you don't like going short and you don't want to just stay in cash, maybe this is a place where you can put some of your money. And I don't give recommendations. I'm just explaining the logic behind it. I like to look at this chart. This is a long-term picture of consumer staples. And this just illustrates this 50 level, right? 50 was pretty much the exact top throughout 2015. And it might look at here like it's way over, but it's really not. It's like 51.50 or 50.50, I mean. was the exact low last September, a year and a month ago, and this was the top around May. So anyway, so if these things head lower, I'm going to be looking for significant support around 50. It's going to take a while to get through that, in my opinion. And if it holds, it could be a buy trade. All right, now here's energy, and here's another thing that I was talking about. So when energy got down here, it was oversold, right? But it didn't bounce, it didn't break its downtrend line. It's just been consolidating. So now it's no longer oversold, and it seems to be taking out support at the 72 level. Okay, so this is another sector that's testing the lower end of its range. And here's another long-term chart, which is pretty cool, which shows levels. I mean, look at this 78 level, right? You don't need to be a chart guru. See, that's resistance, 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 resistance. I mean, pretty much within $1. There's no way any energy analyst or fundamental analyst could ever explain how these things could have the exact same valuation at 4 different points in history. Whoops. But if you understand that the markets are driven by the levels that are important and the trends that are going on, you can see why, or understand why. Okay, here's materials. You can see there's another sector that's testing support, right? I assume there would be support around 53.50 because it was a top in the first half of 07, or 17, I mean, and it was the lows last summer from June through August. So, I mean, we had identified these levels and talked about them for the last month or two, and sure enough, guess where the market stopped? But we don't have to pat ourselves on the back anymore over here at Bullshead because we get enough positive emails and responses now that we understand that people are catching on to what we talk about. And I don't like the term technical analysis, but I understand why people think it's a myth because so many people out there that do it are so bad at it. But the same goes for fundamentals, but people still listen to them for some reason. But anyway, technical analysis should just be a way to analyze the charts and figure out where what the supply and demand dynamics are. I mean, it's not rocket science, right? You know that 53.50 was an important level because it was pretty much the exact top through the first half of 07, or 17, sorry. And it was pretty much the exact bottom through the second half. Okay, look at that. I mean, look at how that is. You don't need to be a guru. So anyway, so when the market sold off, it only makes sense that this is where support's going to be. But here's the thing. They became oversold, and generally when you see oversolds, they hit a support on level, they bounce back up. And I even talked about this as a potential trade last week, but that didn't happen, right? It's just, it got to the level and it traded sideways or consolidated, and that took the oversoldness out of it. So that makes the odds much better that it's going to break and head lower. All right, last but not least, here's utilities. And you can see ever since they found support, 52, which was resistance here and support here, they've been trending higher. If this trend breaks, obviously I'm going to be looking for support around 52. If that breaks, down here around 49. Personally, I don't trade utilities because they're just too boring for me. But anyway, so the takeaways are this week that there's some important support being tested. So if we see a big move down, wouldn't be surprised. And whatever the media attributes it to, it's going to be wrong. My guess is they'll attribute it to midterm elections or what else? Judge Kavanaugh, or I don't know, some astronomy thing, or I mean astrology thing. But anyway, so that's it. Thanks for tuning in. I hope I helped you, and I look forward to speaking with you next week. Thank you.